What's going on, YouTube? Novadella Investment back with another video updating you all on what's going on in my Composer portfolio. Man, look at this. We've been getting destroyed. Destroyed. We're down we're down to 5% now. Remember, we started this account way back in May of last year, not even August, May of last year. And we were up to around 23, 24% 2 weeks ago. And we've dropped 20% within that with since that time. I think the last time we talked about this account, we were sitting at what 11,600. Yeah, 11,600. So we lost a little bit over two grand, but oh well. I mean, right? That's the bit. That's what we're in. We're in it for the long haul. Don't gamble with money, right? Because right now, I guess it's gambling, messing with these symphonies. But don't invest money you can't afford to lose, right? And then so we're not panicking. We're not worried about it. If it goes to zero, it goes to zero. Oh well. But I'm gonna document it, be transparent, and share with you all. Period. That's what we're gonna do. Yesterday, Friday, last day of the trading window for this month and the week, we were actually down to like 1% cumulative return, and then I don't know what happened with I don't know if the market. I guess if the market enjoyed the argument between because it wasn't a conference really, it was an argument between our leadership and the leadership of Ukraine. But that was a wild situation. So I guess the market after that happened, I don't know if that was the cause of it. Who knows? But the market clearly just turned around and finished strong for the day there. Because I was thinking we were going down, 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 down to negative cumulative returns, but I somehow opened my Composer at the end of the day, and we're up damn near 3-4% on the day, which is pretty cool. But let's take a look at what we're doing with the symphonies. So I made some changes, right? Got out of some that I didn't believe in, I didn't like, as far as didn't like the back test when it comes to the out of sample, not the out of sample, but the max back test was the performance did not match the out of sample performance. So I went ahead and made some adjustments to some of the symphonies that I'm investing in, added some and got rid of some as well. And here you can see what I'm currently all the symphonies that I currently have. I plan on investing in some more that I have on my watch list going forward, but I want to wait until those have more time out of sample to see if that performance matches some of the stuff that I'm seeing from the back tests right before it started trading live. So yep, this is what account what we have. Still messing with simple, right? Even though it took a hit at beating as well, right, during these last 2 weeks. But I'm still racking with simple. And then there's a few others in there that obviously some of you all probably might have had as well. This here, I thought this was gonna be a better performance. I was sitting at, I had deposited more money into this symphony here, and we're at 3,000 invested in this, and then it just tanked. I mean, I can't, right? I want to say tank. I'm not trying to over exaggerate because it's not really that much, right? We're down $500 in this symphony. It made a little $50 yesterday, so that's a little confidence booster going forward. But a lot of these symphonies have changed when it comes to what their auto sample looks like on the simulated test, right? So if you look at this one here, remember we're still at 605 annualized, right, and 633 cumulative returns since it started trading live. So it's still performing well, right? We're down 15% over this month, right? We're down about half of the last 3 months. I mean, that's pretty good for 3 months. Imagine 15% on a $100,000 account. You know what I'm saying? So you're still sitting pretty over the last 3 months. Over the last year, look at this, right? The max drawdown could be a little better, right? Okay, cool. But it's doing a lot better than TQQQ as far as the performance when it comes to risk to reward ratio. Sharp ratio is still above 2. Obviously, going forward, and I'm not expecting it to stay at 3, right? That would be pretty crazy. But I see a lot of talk about this particular symphony, and people are tweaking it and making changes and so on and so forth, and which is cool. But if you look at the big picture, um, you're gonna have pullbacks. You're gonna have sideways markets. There are gonna be times where the fundamentals throws off the technical analysis, right? Because a lot of talks about tariffs and wars and inflation and so on and so forth. So the symphony might be working when it comes to like what you program it to do or what you think is supposed to be doing on the technical side. But sometimes fundamentals don't play ball as far as what the news is around reporting and so on. So I say that to say don't panic, right? Don't panic when it comes. I just did another video about my M1 account challenge, and I was looking at the S&P 500 chart, and I was telling folks to zoom out. I mean, if you zoom in, right? If you zoom in, obviously it looks bad, right? You see all these long candles just stepping down, right? Leg down, and obviously you see what happened yesterday. But if you actually zoom out, we're not. Look, we're sitting at what 594 right now, right? And 570 would be hitting the 200 moving average. So we're talking about another 20 points down. So why are we panicking right now? I get it. The account is red. I mean, it's causing. I mean, people are panicking, yada yada yada. But we have to fill these gaps. Look at this gap. We have to fill these gaps. You know this was coming. I don't want to get into too much trading and analysis, and so on and so forth, or charting. But people are panicking as if we're below the 200 moving average and we're back in 2008, 2011 all over again. No, we're not. It's not that bad. What might be bad is the symphony that you're investing in. So you might want to do a better job of picking better symphonies and not just and really evaluate and study what the back test looks like, right? And what the out of sample test looks like. You can look at a symphony and go all the way back to 2014 and look at these long, right? These big long up and to the right performance, right? But if you actually zoom in, we talk about zoom in, right? If you actually zoom in, you're gonna realize like no, it's not all pretty. You're gonna have downs, you're gonna have sideways, you're gonna have dips, and you're gonna have times where it takes off, where it catches. You just gotta stick with it if you actually truly believe in a symphony. You know what I'm saying? If you truly believe in it and what you program it to, you're still gonna be a smooth sail all the way up. That's impossible, right? You're not gonna have these big 350,000% gains and so on and so forth without any pullback and all that when it comes to the technical and the fundamentals not aligning. So stick with it, man. Don't panic. We're gonna be back. Don't stop. Don't go in there and keep adjusting your symphonies and curve fitting it. You know what I mean, and so on and so forth because it's going to hinder your performance going forward. You know what I mean. So look at this. Look at the big picture. We're not down that bad. The portfolios is not performing, and I was in some not risky, but some bad symphonies as well. And that was I guess that contributed to some of the market dips that we've had in our cumulative, but we're still holding. We're still going strong. I'm gonna add some more going forward. I've got a bunch of symphonies that I've edited, created, um, shared, and so on and so forth in my watch list that I'm watching and waiting for the out of sample date to give me a little more time, right? So I can actually feel, I guess, a little more comfortable in pulling it up and actually putting money into it. As you can see, look at this one right here, out of sample. This is pretty. This has been pretty steady, even with the market dip this last month, right? Like I said, look at SPY. It's only down 1.7% over the last month, and this is actually beating it. You know what I mean? And it's beating it also on the cumulative and the annualized. and it has a good Sharpe ratio and a good camera ratio, and it also has less drawdown, but it's more dividend focused. So it's holding JEPI and it's holding TECL for the most part, most of the time. But I went ahead and adjusted that, and I think I created one where I swapped out JEPI with JEPQ, and the performance was actually a lot better. Obviously, JEPQ performs a lot better than JEPI, and JEPQ actually beats the S&P 500. So I did one with SEHD, DGROW, and JEPQ, all these two growth ETFs, and then straight covered call ETF, and then with TECL, just to see the performance and see how it does going forward. And I'm watching it to see what it's doing going forward. So I might throw some money towards it. Right, look at what it's done over the last month. They're only down 3%. But it's only up 2% over the last 3 months if you look at the back tests. But not enough time live trading to even consider jumping into this, right? And then so we're just gonna sit on the sidelines and see how it performs, and then go from there. But hey, I just want to jump on and share and bring out the portfolio and show you guys that I'm still rolling, not panicking, not worried about it. It's just gonna go down. Sorry to curse, and it's gonna go up. That's just the way it is. You know what I mean? We're like I said, we're gonna go through some crazy times over the next year to 2 years, 3 years, 4 years with trade wars and tariffs and whatever else. Just stay the course, man. Because the economy, we can't go to zero, right? And if we do, then shit, all hell's gonna break loose anyway. So money might not even be might not be you know what I mean, valuable at that point anyway. Just stay the course and understand what you're in it for, and keep going, man. But I'm gonna stop rambling. I'm gonna get off of here. Uh, like, comment, subscribe, and share if you can, please. Talk to you guys later. Peace.